Hi, this is Zach Meir with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 19th of October. Starting off with the FTSE 100, which is still within that rising trend channel from June. We were hoping there might be a fresh leg up, perhaps towards 9,800, etc., earlier in the month, but obviously we've had to come down and test the floor of the channel there around 92.75 and also the 50-day line there at 92.82. In terms of what happens next, well, ideally we get back above recent broken support around 93, let's call it 93.90 on an end of day close basis. If we do that quickly early next week or early this week, then we could be back on target for an end of November target as high as 96.70. Otherwise, rather more complicated below the 50-day line, the risk of a move down to mid-September support towards 9,200. But I suppose at this stage, not expecting anything worse than 9,200, and ideally, this is the worst that we see at the floor of that channel. The DAX is next, and here see that we also hit a support line there, in this case from back in April, and bounced back a bit. Actually, we missed the support line, so we're actually a bit above it. Problem here is that we've got the 50-day line falling, and we've also got the RSI pushing below neutral 50 at 43, so that does imply that we might have to have a test of August-September support towards 23,200, and even the 200-day line just below it at 23,100 before this market gets back on track. Obviously, we've also had an extended topping out there towards 24,600, the record highs, and that is not actually a good look. So I suppose one has to factor in a test of that 200-day line. Early and end of day close back above 24,000, and the 50-day line really snapping us out of the negative development that we have at the moment. The Dow is next, and here we've managed to behave quite well, actually, with the tussle between it and its 50-day line there, 45,725. Still got a line of resistance there from the beginning of the month. That's around 46,200, so need to break that to get us back in shape for a move to the top of the rising trend channel from May last year. And that has obviously guided the market higher. The 50-day line obviously doing that at the moment, but that 46,200 area needs to be broken sooner rather than later. Sort of RSI 50 rebound helping the cause, as well as the way that we bounced above the rising 50-day line since Wednesday. So that is actually a good look in terms of a potential recovery. The cryptos are next, and obviously well, not obviously. We've had the pain of a break of the floor of that channel. We've also had the pain of a break of the 200-day moving average just above current levels, so called that 107,300. Below the 200-day line, we've got the risk of a move down to 98,000, which would not be a very good look. And obviously, that's hurt most of the cryptocurrency brigade. In fact, we can even get rid of that best case scenario resistance line. What we really don't want to see is a break of 98,000 rather, and what we would like to see is a break back above the 200-day moving average. At the moment, I suppose one could say that there is the risk that we've got this market in a channel like that, and maybe perhaps even like that, and that is why we're bouncing around here. But anything lower than that widened channel would be a concern, especially after the way the 50-day line is starting to fall, and also the RSI 50 failure that we've had. So crucial time here for Bitcoin, and as I said, 98,000 should not be broken. Onto Ethereum, which, if anything, has had more hopes attached to it and then had more hopes dashed. But at least this market is well above its 200-day line, 31.77, which is good. And if we're lucky, I suppose we could stay above an uptrend line, which is like that, and that fits rather well, actually, that one from April. The floor of that channel, or the support line there, is basically Thursday support, so that's around 36.80, and above that, then we could still recover and head back to the 4,500 plus area by the end of this month. But still a bit on the edge with the RSI 50 failure, but hopefully that line there from April will come up with the goods. On to gold, and here I believe the rug was slightly pulled, in the sense that we hit our 41 or basically 4,200 target there, but we had a best case scenario or even better case scenario target 4,500, That might have to wait a bit, maybe not even the end of this month, maybe by the end of next month. And the hope now is that we at least are able to stay above the 4070 area, which was the initial October resistance. But it does look as though the wind is slightly out of the sails here on gold at the moment, but understandable after such a great move for this market. Moving along to the stocks, and starting off with Ascent Resources, and here you can see that we've done what we were hoping this market would do, which was rally after sideways shuffle above a rising 50-day line, and also a double RSI 50 plus rebound in the RSI window. So that is also looking rather healthy. That suggests that not only was the retest of last month's resistance at 0.62, not a fluke, but an end of day close above that, which should get us up to 0.8 pence. And that could happen perhaps even as soon as the end of this month, while we remain on the right side of 0.5 pence. Bradda Lithium is next, and which is, I think I covered it during the week, but just worth another look now, because it is quite a relief and an amazing, really, that this market is back in business after a long time in the wilderness. Initial resistance here around 1.75 pence, best case by the end of next month up to 3 pence. But I have to say that is the best case on this one, even though we had a decent key reversal to the upside on Friday. But the point here is we had another sideways shuffle above a rising 50-day line, which tends to give the best, or some of the best, moves to the upside. Chesterfield is next, and here not only a rise above a rising 50-day moving average, but a gap higher, and we hit our previous target there around 1.2 pence above that, looking for a best case scenario target as high as 1.75 pence by the end of this month. If we move quickly, which at the moment it looks as though we are, but the key here, staying above that previous target line there and staying on the right side of 1.2 pence. Contango is next, which is something which I was trolled for in terms of being the kiss of death, and I suppose given that the call was around the 0.8 level and we rallied up to a penny and then came back low, so far it's kind of been the kiss of death, but looks as though we've got a bear trap rebound here above 0.8, looking for this market head up to 1.3 pence, perhaps by the end of next month. Obviously, we've had many attempts at recovery here, but with the RSI uptrend line there, this one looks a little bit more credible, or more credible than the ones in the recent past. More days this week spent above 0.8 should hopefully soothe nerves. On to Eurasia, which has been perhaps helped by talk or speculation regarding an improvement in the Russia-Ukraine situation. It couldn't get any worse, really. Top of the channel there, 5.4 pence. We're looking for that by the end of this month, while we remain above the 50-day line there at 3.75 pence. Next up is Eco Buildings, which is one of the stocks of the week, and here you can see why. We've been on this basically since the beginning, but it's a bear trap gap reversal. The hiccup here was that pullback that we had in the middle of last month, but we managed to bounce off a rising 50-day line, so that gave us a clue that we were going to head back higher again. The initial target here after that trend line break at 5.75 was around 9.25, and above that we're looking for 14 pence in coming days. Ideally we stay on the right side of 10 pence now, as that was resistance on the way down. On to Hama, which has had a few kicks and punches by the bears in the recent past, but has a chance of salvation now with the 200-day moving average rising there. I can see that is around the 1.75 pence level. We had a little dip below that, but we can get another end of day close perhaps above that, the 200-day line. The upside here could be 3 to 3.5 pence, even if the shares drift after that. Looks like we've come back a little bit too far from that August peak through 7 pence, and also bouncing on that old June resistance and July support there as well. So ideally above a penny and a half, we are in recovery mode there for Hammock strategy. Another recovery situation is Immupharma, and actually looking rather more exciting than it has in recent past. Here we've obviously been regrouping after that peak that we had last month through 18 pence. I think I interviewed the company just before that. Here now we've broken this triangle there at 11 pence, above 11 pence, looking for the top of that rising trend channel, as high as 24 pence by the end of next month. Not quite sure what would do that, but we do have that potential set up there, especially given the way that we've had support points above a rising and well above a rising 50-day line. So that does indicate a lot of strength in that stock. From a stock that a lot of people may have heard of to one that I don't think anyone's heard of, which is ICFG. And here, very simply highlighting it on the basis of a gap fill rebound, which is a signal which doesn't normally happen, but that was at 18 pence. The August gap floor there at 18, and we've had a bounce there in October so far at 18. So above that, looking for the 50-day line up to 28 pence. And you can see that when the shares want to move, they can move if they are in the mood. On to Red Rock, where if Red Rock is rising, you can say that this really must be a bull market for small cap resources stocks. Still not quite through recent resistance around 0.042, but above that we could get up to as high as 007 or 0.07 by the end of next month. The reason for the relative enthusiasm, despite the name of the company and its track record, is that we've had multiple RSI 50 rebounds since the beginning of last month, and also multiple RSI support points above a rising 50-day line since the beginning of last month. The charting works on that. It can work on almost anything. Finishing off with Zenith, and here you can see that we've got the shares in a narrow channel at the top of the channel there, around 4.4 pence, and we're looking for that while we remain above recent support at 3 pence. The big development here, though, would be if we can break through that 4.4 pence number. That would suggest bottoming out is in place. That's it for me today. More updates tomorrow.